Joining us is Amy Wu Silverman, head of derivative strategy at RBC Capital Markets, in studio. And you know what I'm hoping? That I can understand. Since you're here and I can actually talk to you, I'm going to understand all this. I understand a lot of it when you come up, but you're so good at this, and it is somewhat esoteric, obviously, the option market. And your point is that people are asking you now this rally, okay? Yep. What am I supposed to think of it in terms of what options are telling me to think of it? Because they don't trust it. They think it's kind of spotty, not going to last. And you're telling them that, in fact, the options market says there's something going on here.
It has legs, and upon that, too, it also has breadth. So, look, the options market is really good at picking out where there's FOMO. So even if you think back to AMC or GameStop or NVIDIA, the options market tells you when people start getting that FOMO, and that usually exacerbates momentum for a while, right? Now, what we're seeing is there's really an inflection point in the small caps. So IWM, our Russell 2000 ETF, we're really seeing historic bullish option sentiment. You see that through the call demand buying. And this is something where small caps kind of has had fits and starts, right? We've had a lot of strategists say, the time to buy small caps, and that hasn't really worked kind of the last few years. And essentially what the options market is telling you this time is that you're also seeing that FOMO there, which would be a breadth argument to the market that's been very top heavy. It would
mean that as you say, that the rally is broadening out, but it's also broadening out. Isn't this end of cycle stuff? We were just showing a bunch of meme stocks. When you get a bullish sentiment there, is that it more towards the beginning of a move or towards the end of a move?
Yeah, so I think two things are happening in terms of the nuance. The first is I think people, when they look at this rally, they've said, look, it's so low quality. It's very squeezy, right? But the reality is, and this is from our equity strategist, if you actually look at the names within the Russell 2000 themselves, their balance sheets have actually gotten a lot stronger. And when you look at their debt maturities, where that maturity wall is actually 4 to 5 years out. So I think that there is this misunderstanding of, are we talking about this bucket or that bucket? But the other thing is mega cap tech has to remain okay. And the options market is also saying that the sentiment there hasn't waned. So it kind of hasn't changed since NVIDIA, but it hasn't waned. And that would concern me, obviously, because of the heavyweightness of the tech, but that's also not changing. And you're getting the small caps kind of joining the party.
So I saw on your notes you used the adverb, right? Squeezy. You used
squeezy.
And by that you mean that some of the moves higher are seen as because it's short, people are getting squeezed. Is that what you mean by?
Yeah.
But if the fundamentals are improving, and the debt is, you said 5 years out, then that's not what it is. Then it's actually some underlying strength, not just caused by short covering.
I think the problem is both are happening. So when you look at these most shorted baskets, they're also up. When you look at, we have a low quality basket that we track, which is essentially, negative free cash flow, negative net income, high debt to leverage. Those are also rallying, very similar to what we saw at the beginning of this year. But what we're trying to say is, yes, those things are happening. However, fundamentally, you are also getting these shifts in the higher quality names too. And it's very, very bullish and very indicative within small caps specifically, to a point where, we haven't seen this level of bullish sentiment in kind of the last 5 years. And we have seen that in mega cap tech, but we haven't seen it in the breadth that you would see in the Russell 2000.
So why is the market so unloved? The recent rally, why is it so suspect to so many people?
Two things are happening. I think one, especially in our market, it concerns people in general that there's very little hedging. So there is this complacency in the market. It makes folks ask, why are we so complacent? So I'll give you one stat. When you look at tail protection, so just a market drawdown, how much does it cost to protect? We're below levels we saw since October 7th, when the Israel-Hamas war started. Really? That's the market telling you that it's not even pricing in that risk at all. So I think what happens is, you do get these kind of call it May 2020 style, a lot of FOMO on one side, call demand, and also the lack of hedging. And people ask, how concerned should we be that doesn't exist?
Does that lead to massive volatility? Is that if you have no hedging built into it, and then suddenly the situation changes, over a day or over a weekend or over a holiday period.
Yeah. So look, I feel like sometimes as a derivatives person, your job is to just think of you're like Eeyore, basically. Like whatever the worst case scenario is, that's what you stay awake at night thinking about. And the issue is volatility in our market is very suppressed. There are a lot of people who are selling volatility because it's another way to enhance yield. And then on top of that, there's no hedging because hedging hasn't worked at all. So the market was down 20% last year. But if you hedge that market, you're actually down 21%. That's kind of a fail from the options market.
Yeah, kind of.
So, yeah.
and
so, if you're a risk officer and that hasn't worked, it's hard to say I'm going to double that up. And so you do get these 2017 to 2018 events where there was a Volmageddon, especially because there was very suppressed volatility, and then you had
Volmageddon, you called it?
Volmageddon. Yeah, I didn't even come up with that. It's just, people call it that, February 2018. And so, look, that is a tail event that I think folks are concerned about. And again, tails are very inexpensive. It's not the most likely scenario, but that's the point. The unknown is very inexpensive right now to capture, and we do see some funds thinking about that for 2024.